Hey everyone, I'm Ashish and I'm back after an unscheduled break. A lot of work and travel cropped up, but I'm back with a new flexible format and I'm here to stay. So let's start. Imagine being stuck in a tiny seat for hours with no space to stretch your legs or even move your arms. That's the reality of air travel for millions of Indians who have to endure the torture of budget airlines. They squeeze you like sardines, charge you for an extra kilo, and make you feel like a second-class citizen. But not anymore. A new wave of affluent and savvy travelers is demanding a better way to fly. They want comfort, convenience, class. They want premium travel. Which is why airlines are no longer selling getting from X to Y. Everybody's already doing that. They are selling the experience within and outside the cabin. The competition is heating up with new premium seats with privacy wings, priority boarding, wireless charging, gourmet food to win over the customers. At the national level, a 2x increase in premium economy and a remarkable 3x surge in business class selections was observed last year. Rajesh Magau from Make My Trip attested to this shift, stating, "We observed a 3x growth in booking of premium economy on domestic flights compared to the pre-pandemic period. For international flights, this surge is almost 1.5 to 2x over the same period on our platform." And with Vistara merging with Air India by mid-2025, there will be only one airline catering to this airline premiumization trend in India. This is why Indigo's management is now convinced that it should not give away premium passengers on a platter to Air India and Vistara. Indigo, with its 350 aircrafts and nearly 60% market share, has made a significant more formidable network than its competitors. It has revolutionized the Indian aviation industry by making air travel affordable and accessible. Now the company is ready to shed its one-size-fits-all cheap airline image. But you can ask me, why take the huge risk? With increasing disposable income, middle-class Indians are opting more premium options in all spheres of life. According to Goldman Sachs, in the past 3 years, companies which address the top-end consumption have grown faster compared to those that address broad-based consumption. Travel is one sector where this trend is clear. Make My Trip reports 20% of its travelers looked for properties about 10,000 rupees per night. India has also become the second largest market for premium credit cards, most having travel-oriented perks, and this growing by double digits. But the most striking thing is the evidence in the air. While economy class fares dropped by almost half in 2023, business class fares soared up by 60% on busy routes, according to the aviation analytics firm Cirium. In a market where yields are razor thin and where airlines are not free to unbundle fares due to strict government regulations, this additional fare will be critical. Indigo has no choice but to jump from customers who need to travel to customers who need a different class of travel. The other question to think about is, has this been done before? Yes, JetBlue, a low-cost carrier which operates in the US market, has been successful in offering its premium seats. Its premium product is called Mint. It is a hit among its customers, especially on the long flights. Mint seats are not only comfortable but are also very profitable. JetBlue can charge more for them, and over time these perks also boost its customer loyalty and satisfaction. Indigo is expected to follow suit and invest in 2 business class seats on either side, like the North American style of seating arrangement. Now, why do I think it will pay off? Indigo's operating cost is one of the lowest among airlines in the world. It costs them only 4 rupees 38 paisa to operate a seat for every kilometer. In comparison, Air India spend more than 6 rupees. And business class seats are usually considered to be high value and high margin products. The introduction of Indigo's business class seats on select domestic routes is likely a precursor to offering this service to international routes, which will bring in even more revenue. So combining this higher fees from the passengers in the forward cabin and lower cost structures, Indigo will be able to offer lower business class fares as compared to its rival airline, which cannot do it because of the higher expenses. And in a price-sensitive market like India, this is going to be a game changer. In addition, Indigo already has 25 aircrafts grounded for the maintenance repair, and it is using this downtime to fast-track its dual-seat configuration for its new business class. The move by Indigo is expected to help the airline test its premium service in India, train cabin crew, save costs, and avoid grounding of more planes to install new seating. The company has already started working on inducing premium purchase behaviors and if you remember, by introducing new fare families like providing several perks like baggage allowance, extra legroom, food for a small price. The question is, how does it fit into the Indigo's growth story? Indigo is actually firmly poised towards newer heights across newer frontier strategy. From a revenue perspective, it is adding new high-yielding international routes and increasing traffic within existing domestic corridors. It is also exploring the potential of loyalty program, especially with an eye on the premium business flyers and international customers. The new business class story plays right into the story of Indigo. Now, if you think about from a capacity perspective, it gained global attention in the Paris Air Show last year when it placed an order of 500 Airbus planes, the biggest single purchase agreement in the history of commercial aviation. From April 2024, it started receiving one new aircraft a week, facilitating an expansion of the current fleet. From a cost perspective, the market leader position allows the firm to offset two major cost drivers: escalating fuel costs and the airport charges by transferring a considerable portion of it to the customers, thus allowing it to maintain profitability. So, should I invest? Indigo has a very strong fundamental with profit margins being high and earnings quality being really good compared to its peers. It has high debt, which is concerning, but it is expected because they are aggressively doing fleet expansion. The valuation too today is at a very reasonable level. With Indian travel sector continuing to increase and as a market leader, the airline has a potential to grow these earnings at a faster pace. The stock can be added to the portfolio on every dip with a long-term perspective. That's my time for today. Do like and share the video, and I'll see you around next time. Cheers.